Wowzapalooza. I get home from work. I just expect to come home, relax, go take a little nap, and get ready for work later tonight. And instead, I come home and crap my pants. Legitimately, I've crapped my pants today. And you need to know that because the market is down 10 freaking percent. 10%. Holy cow. So, this, again, even this, the Dow here. Look at Apple down 12.5%. Apple down 12.5%. Microsoft down 11.5%. Holy crap. Disney down 10%. These are quality stocks right here. Facebook's down 11% right now as well. What in the world is going on right now in this market? This is what I would consider to be a drunk market. And I don't think it's necessarily unfair to say that this is a drunk market because I don't think it knows what it's doing. So last Friday, it wants to shoot up 9%, and now today it's down 10%. The day before, Friday, on Thursday, it was down 8%. I mean, what is going on right now? I don't think this market knows what it wants to do with itself. It is crazy. But if you do look historically, we are down at levels that we haven't seen since, well, I mean, you got to go way, way back here, back to 2017. I mean, we're talking 2 years worth of gains just completely erased here. So we're talking under 21,000, which the voice doesn't agree with me, but under 21,000 hasn't been seen since May of 2017. Now, again, we can go way, way back and think about what all we've done since the financial crisis in 2008. So from recovery there, the market's risen over 220%. So that's 16,000 points, all things considered. This thing went down to, we were in the 7,000 range. So the thing is, things could get a lot worse. If you look historically, actually, we'll get into the reason for this sellout too. Obviously, there's a lot of things going on, but if you look historically, and this is excluding today, obviously, look, obviously this, you can tell, this is the fastest drop we have had in just history of the market. The fastest drop we've had in history of the market, no doubt. But if we compare it to other crashes, we're actually nowhere near quite yet. Right now, we're very close to where Black Monday ended up, so we're close to that level. But if you compare it to other ones, the 2007 financial crisis, 2008 financial crisis, really, in which the markets went down 50%, over really close to 60%. 1979, you had Nixon. Obviously, after that, market was down almost 50%. The dot-com crash, down almost over 50% as well. But again, that was over a total of 600 days. This has been a span of 2 weeks that we've seen, 3 weeks, we've seen a drop of the market of over 20%, now over 30%. This is absurd. It's things we haven't seen in quite a long time. I mean, we've never seen this big of a drop. So the question is, where does this go? I mean, from here, I could see a legitimate case in which you see the Dow drop to levels that you haven't seen for a solid since 2015. I could see the Dow going to around the 17,000 mark. I don't necessarily see it going lower than that, but I think it could certainly go that far. And I think there's a lot more coming, naturally. So most recently, the Fed dropped interest rates to completely zero. Rates are dropped to completely zero, which is not an unexpected thing. My question is, really, slashing rates is meant to spur financial growth. It's hard to spur financial growth when everything's shut down. As far as everything being shut down, I really believe there's a few things that need to happen, and I think that will happen. So I think first we'll get a payroll tax bill, which will completely eliminate payroll tax for the short term, just until we get out of this. I do think also, which is going to be a big, big pain, I don't know how this is going to go and how the market's going to react to it, but I think there's a chance that we get an announcement of a complete shutdown of literally everything. I mean, everything will be quarantined. I think there is a potential that everything gets shut down here within the next week. And that would be a 2-week process is my assumptions that include the stock market too. So everything will get frozen. The question is, what does that look like afterwards, and what's the reaction to it beforehand? I think the reaction to it beforehand is going to be overwhelmingly negative, but I can't say that for sure. This market doesn't know what it wants to be, and I think people are and selling so much, and we have so much volatility right now. It is crazy. Investors don't know what they want to do. Do they want to invest in crypto? Do they want to keep investing in equities? I don't know. In my opinion, I say I'm all in for investing in equities still. So I'm still regularly putting money in and putting in a lot more now than I used to. Every time I see a big drop, I'm putting in a lot more money than typical. And why is that? I'll just show you my M1 portfolio, in which obviously I'm down 16%, which I hate to see. You hate to see all that gain just completely gone. But if you look, obviously market gain, I'm down $800, but in earned dividends, I've made $212 on this portfolio since July of 2018. Okay? $212 since July of 2018 on a portfolio that's only $7,000. This is what I'm in the market for. I'm not scared during this time because I'm very confident in the companies that I currently have. I've invested in some good companies here that I think are going to be good long-term investments that pay me dividends out. So all things considered, I'm not as concerned about market gain right now as I am about just sitting it out and earning dividends. And it's one thing I've learned through a lot of people that I've really learned investing from. Fear is really the way to lose money. When I started out investing, we had some very turbulent times. I started investing in 2017. In 2018, December 2018 was horrific. I mean, that was the first time I had seen really huge swing downward, and I had sold stuff for losses, and it was a huge mistake of mine. Because if you look since then, I mean, I missed out on a 20% gain. I could have, obviously I bought back in, but I mean, if I still had more money, and I could have had a bigger gain since then. It's just, I've learned even myself in just a couple years of investing that, I mean, the fear is always going to overwhelm the market. There's no doubt, but you need to be calm in the presence of fear because that's how you make money. When the stocks are getting hammered like this, you putting in more money, it's how you make money over the long term. It's all about the long haul as opposed to the short term, in my opinion, and that's where these dividends come in. The dividends are my long-term benefit. Market gain is good too, and we'll see that with this portfolio I have right now. I'll certainly see it. Come 5 years down the road, I'll see it. As we're leaning into recession type territory, I've never been a part of investing in a recession, but you know what? I plan on continuing investing, no doubt. This thing could last a year out, but while stocks are down, I plan on buying heavy, and I will continue to buy heavy. I don't know when the bottom is of this thing. Again, I said it could go down to 17,000, and I think it's possible. If so, I have a lot of cash on the sideline. I will continue to buy heavily into stock, and especially ones that'll pay me dividends. So in the meantime, while the market's going crazy and bonkers, I can be earning money. And I don't need to be afraid of my positions getting terminated because, well, I'm pretty confident in the holdings I have in this portfolio. So same with my Robinhood portfolio too, which is obviously a lot bigger of a portfolio than this, but ideally I want this M1 portfolio to become bigger than my Robinhood one, and that may come with time. With all these more big investments going in, there's a potential to see that happen, but I'm all about the long term, and I think I really like dividends here. It helps me stay confident in my portfolio, and I'm not too upset. I don't like seeing negative market gain, but again, I can stand it because I know in the long term I'll be making money on this. So that's all I got for you today, and I hope you enjoyed.